Hey everybody, Boris speaking Forex. Welcome to the crosses section for September 24 to September 28, 2018. And the crosses this week actually were a little bit challenging because there was a couple of very obvious trades, but overall, we're sort of in this very funky balance here between the comms and the majors. And there really weren't that many clean setups, but there were a couple of things that could go one way or the other. So let me show you what I have in mind, and we'll take it to the charts right after that. The one trade that really looks very much bottom of its range right now is Aussie Kiwi. It's a 110, 108.50 range. We had a big correction on the Aussie side so far this week. What's interesting here is it could go either way, and I would love to wait, I think, till Wednesday, till the RBNZ decision. Because if the RBNZ, let's say, is neutral, which will be viewed as bullish, that could break that bottom range. And that could be a signal for further continuation. So if we take out the 108.50 to the bottom, especially post RBNZ, that could be a very interesting trade for more of a continuation move there. Conversely, if you want to fade the Kiwi, sort of if you think the Kiwi is kind of topped out in the near term, maybe front of the week, the one clean, interesting resist point here is the Kiwi Yen at the 76. It's very much the top of the range, is flaming out a little bit, and doesn't have much farther to go. So we'll take a look at the chart there, and I'll show you where the correction there could lead us back at minimum maybe 75 to 74s. But the single most obvious trade, and maybe that's why it's most, in some ways, most dangerous. Sometimes the most obvious trades are not the best ones. But this one is just so clean that you really have to put it on the radar. That's the Euro Pound breakout today. I mean, that breakout is very strong. I'll show you the charts, and it really has scope to go to 90.50 on the move. Let's take a look at the charts, and I'll show you what I have in mind. So this is the Aussie Kiwi range. You can see that it's this, we're 109 now, and this 108.50 is the absolute bottom of this range. If RBNZ comes in and its market interprets it as hawkish, we could break it. A breakdown here opens up the scope all the way down to below 108. Now, this is not obviously a big moving pair, but it does have some scope for further downside momentum on a break of the range. Conversely, if we start to see the Kiwi correct here, the climb back up easily can take us all the way out to 110. I think you have to just sort of look at the price action here and follow where it goes as the week develops. But it has a potential to go one way or the other as we get into the midweek trade. Now, the second trade that I want to show you was, let me find it on my, here we go, Kiwi Yen. So Kiwi Yen here is, it's a mild flame out. It's a shooting, kind of a shooting star. We can get a little bit bigger here. But trading against this overhead resist here at 76 may not be a bad punt to see if you could just have a little bit of a corrective move here. Yen is a little bit weak. It ended up on not on the highs of the day. And if Kiwi begins to correct just a little bit as the week starts, certainly you have like lots of analogs where you have these big flame out candles and you have 1-2 days and then a nice corrective move. You know, 1 day corrective move, 1 day corrective move, 1 day corrective move. This is a pair that gives you that flame out signal quite consistently. So maybe worthwhile to take a punt here for 50, 60 points as the week starts out. But last but certainly not least, the cleanest, clearest trade on the crosses right now is this one today. I mean, this was a massive move here. This is obviously the pound weakness on the trade, but also euro strength was quite good. If you look at it just sort of on a classic technical analysis, we're above the 20, we're above the 500, we're looking in a nice clean uptrend, big candle up. Even when you have sort of limited continuity, these big breakout candles tend to signal further continuity most of the time. Even here, there was a 50-point continuity here. I'm just trying to see if I can find a big upside candles. You will have, no doubt, this is why the signal needs to be taken with a little bit of grain of salt. You will have sometimes, and this is obviously headline risk reversals, some corrective moves, but as long as the bottom of the candle doesn't get taken out, you still may have some continuation. My point is that whether you decide to take it, here's another big candle on the euro pound where we have some continuation going on. Whether you decide to take it as a straight up momentum trade, or if you want to build on any kind of retrace, so you buy partial here and you build a little bit of a position, as long as the position stays below the 88.50, and granted that's a big, big 120 point move, but I think you feel relatively comfortable building any kind of a scale down position here for eventually move up or extension up. So this could be a week to maybe even a 2 week kind of a trade, but I like it. It looks pretty strong. Of course, it's subject to headline risk, and of course it can reverse. But assuming that we're not going to get any Brexit resolution anytime soon, this suggests we're going to 90.50 one way or the other. And whether you just buy single entry or scale up, scale down, it could be a very interesting trade for the near term. Wish you guys the best luck, the best trading. Boris, over and out.